All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go on and talk dividends and how they affect options. Okay, and I want you to keep in mind a couple things. What is a dividend? Okay, what is a dividend? Well, a dividend is basically a profit share. Okay? There are two ways that a company can give value back to its shareholders. Okay, number one, it can distribute the profits via dividends. Okay? Number two, it can buy back stock. It can buy it back so that, hey, the general price of that stock elevates and creates shareholder value. Okay? So those are the two most common ways that companies will take their profits and give them back to investors. This year we've seen a lot of dividend increases. We've also seen a lot of buyback increases. So what that tell us? Well, company profits are growing relative to where they've been, and they're distributing more of those profits out to their shareholders. So the question is, how do dividends affect profit share? Okay. Well, or how do they affect trading from a stock, from an option standpoint? Okay. Well, there's no set rules for dividends, meaning a company doesn't have to give dividends. Okay, there are companies that give them consistently and have for many years. A company can pay a very small dividend on a frequent basis. They can also come out and declare a special dividend. You know, some of the buzz around Apple. People are wondering, well, is Apple going to come out and with all the cash they have, they could declare a $30 dividend and just pay each one of their shareholders $30 a share with some of the cash that they have on hand. Now, is that likely to happen? No, but does that happen with various companies from time to time? It sure does. Okay? Every company will have a dividend yield. So let's take Disney. I'm just here at Finviz. I just typed in Disney and I'll show the dividend percentage here. Okay? So basically this dividend percentage is how much of the share price in the stock is going to be distributed to shareholders during the course of the year. So if you buy a share of Disney stock, you are going to get about a 1% return every year. Okay? Now, that's assuming the stock price stays flat, but that's the dividend payout. Okay? Some people like owning stocks for just these dividend payouts. They don't care whether the stock goes up and down. They're planning on holding it forever, essentially. And they're just collecting the dividend on that. And that's a very popular strategy in the market for stock traders and for other asset classes out there. For option traders, it's not really that big of a deal, and it's something that you have to account for, but it's nothing that should shy you away from a trade. Why do I say that? Why do I say that? Well, it's all calculated in what is called the Black-Scholes model. Okay? And the Black-Scholes model basically says, okay, that your option price is a function of several variables. Okay? One of them is stock price. Okay? One of them being time. Another one being interest rates, which we don't really account for because they don't change very often. Another one being dividends. And then the final category, implied volatility. Okay, so basically, they say, well, you know what, there's this other class that we can't quite measure. We can measure option price, we can measure stock, time, interest, dividends. Can't measure implied volatility. So if the option price is going up, it's probably due to implied volatility or some change in this kind of catch-all of implied volatility. So dividends factor in here. Well, one of the things about dividends is they're seen ahead of time. Okay, they are seen ahead of time. They are known ahead of time. Okay, and they're right there. They're right there in front. They're right there in front of every investor to see. So it's not something that catches people off guard. Okay? One place to see dividends is just a simple website, dividend.com. Okay, dividend.com. Okay. And you can come in here and you can say, well, all right, let's take a look at stocks that are releasing dividends. I'm coming up here to where it says X dividend date. Okay, X dividend date. And what it's doing is giving stocks that go X dividend today. Well, what does X dividend mean? Well, X dividend means that you need to own this stock by the X dividend date in order to receive the dividend payout. So there's an X date. So on AEM here, today's the X date, 11/27, for the 22-cent dividend. Now that dividend won't be paid out to the 16th, but if you decide to sell your stock after the 27th, you'll still get the dividend. If you decide to buy the stock, let's say on the 15th, you're not going to get the dividend. Okay, so you basically have to own the stock by the 27th of November in order to receive the dividend payout. This is what it means by going ex-dividend, and this is why investors pay attention to the ex-dividend date, not necessarily the actual dividend pay date. Now, theoretically, options account for the dividends. So I'm going to go to cboe.com. I'm going to go into the option calculator. Okay, this is a tool that we talked about during the education week to kind of figure out, all right, where are the theoretical values of these options. Okay? So if we come in here, let's just put in MRO for kicks and giggles. Okay. Notice down here below, they account for the dividend. Dividend date, the month, and the dividend amount, 19 cents. Okay. So what that's going to do is it's going to affect the value of that option. Okay. But just because the stock goes ex-dividend, what will happen when it goes ex-dividend, the actual stock price will drop by 19 cents. But that's not going to create a increased or decreased value in your call and put options because they are already accounting for it. Okay? They're already adjusting for that 19 cents. So it doesn't matter from an option value standpoint. Okay? Now, if there's a whole bunch of people that want to be in ex-dividend and then are looking to sell the stock post-ex-dividend, well, that selling pressure could affect the calls or the puts or vice versa. Most dividend amounts are so small that you just can't really even tell with the option price. Okay? You just can't tell them. So it's nothing that I get overly concerned with when it comes to an option trade. Yes, do I know it's there? Do I know it exists? Do I know something weird could happen? Sure. But in general, you kind of just go on your merry way with the trade because it's already priced in. It's already here. And what's really going to affect things? Well, the value of the stock. Okay, or the value of the stock. All right, couple questions. What's the relationship between earnings per share and dividend percentage? Not much. They're complete different numbers. A company can have a raise or an increase in their earnings per share. Let's say their earnings per share go from 2 to 5, but they don't have to increase the dividend. Okay, their earnings per share could go from 2 down to 1, and they could still increase the dividend. The dividend increase or decrease is left to the discretion of the company management, and it doesn't have to be correlated to the earnings per share per se there. Is the dividend paid on long options? It's not. It is not. So if you own call options, stock goes ex-dividend, you do not receive that dividend. Is the dividend subtracted from the option price? Yes, it generally accounts. It's accounted here in that. So if we take this dividend amount, well, let's just go. Let's say theoretically 12/18/2013. We're gonna let's just say a 25-cent dividend. Our call option that's theoretically 85 cents, given the variables we have here. Okay, these aren't for our current MRO trade, but given these variables, our option value goes from 85 cents, okay, to 81 cents. You see how little that was? I mean, there's just doesn't hardly change over there. We can up that dividend to $1. Okay? Notice what happens. The call option went down slightly, but the put option went up quite a bit. Okay? Why is the put option going to be more expensive? And why is that put option going to be so much more expensive? Well, simply because the stock will actually go down by $1 at that date, so they have to account for it. Okay? When MRO releases this dollar dividend on the 18th, okay, hypothetical scenario, our stock price is actually going to drop by $1. So that means our put is actually further in the money. So it adjusts for that. It adjusts for that. You want to see how much the adjustment is? Just come in here, take out the dividend. Okay, just take it out and see how much the call and put option differ, and you can see what the net adjustment is there for that option. Now, dividends here in the market, when we're talking about a stock like MRO where it's small, or Johnson & Johnson where it's small on a percentage basis, I just don't really care. When you're talking about a $3 to $4 to $5 special dividend, I care a lot more because sometimes the effect is a little bit bigger. Okay? Ex-dividend date here. Okay, ex-dividend date. Let me go back here. Ex-dividend date again is just the date by which you have to own the stock in order to receive the dividend. They do not get paid out on call options. Okay, you do not. If you just own the call, you do not get the dividend. If your call is exercised before the ex-dividend date, then you're fine. But when it comes to option trading, paying attention to the dividend just really isn't that big a deal. All right. One other comment in regards to dividends, and this doesn't have anything to do with options on dividends. Okay? But a lot of people kind of get in their mind that, hey, because a company pays out a large dividend, that stock should go up. Okay? That stock should do very, very well. Let's pull up TNH, Terra Nitrogen. Take a look at their dividend percentage at 5%. Okay. Well, for a while this was much higher, but look at the stock. The stock's gone from 210 down to 150. Okay. What's happening to the dividend percentage? Well, it's rising. That's a beautiful dividend, isn't it? 5%. I mean, you just go buy Terra Nitrogen and make 5% a year on it. You think, hey, home run. But you do have stock risk. You have the risk of holding the stock, and hey, it just fell 25%. You need 5 years of dividends to make up for that. Okay? So dividends in general are very small relative to the broader stock action. So if you're holding a stock for the idea of dividends, please make sure that you're not just holding it for the dividends, but that you're holding a good stock fundamentally and trend-wise. Okay. I know Disney isn't paying out a huge dividend, but it's one where, hey, I'm not worried about Disney getting cut in half. Terra Nitrogen, on the other hand, hey, this is a company that could be cut in half, so you have a lot more risk. So your dividend percentages will typically be a little bit higher. Alrighty, well that's that on dividends here, and again, with the challenge, you won't really even see us account for those in many ways at all, other than to mention that the stock's going ex-dividend. All right, well, thanks for hopping on, and we will talk to you later.